In the world of trading, there are big wins and there are legends. In 1992, George Soros made a single bet so massive, it shook an entire nation's economy. In just one day, he pocketed $1 billion, while the Bank of England fell to its knees. Forex, the foreign exchange market, is the largest market in the world. Trillions of dollars move every day, but sometimes a single trade can shift the balance of power. Today, we'll step into history's most iconic Forex trade. And by the end, you'll understand why economic fundamentals always win. The story begins in the early 1990s. Britain had joined the European Exchange Rate Mechanism, or ERM, a system that tied the British pound to the German Deutsche Mark. The idea? To stabilize currencies in Europe. But there was a problem. Britain's economy was weak, inflation was high, unemployment was rising, and the pound was simply overvalued. Still, the Bank of England promised to defend it. They were prepared to spend billions to keep the pound strong. But in the shadows, one trader was watching closely. George Soros. Soros, the Hungarian-born investor and founder of the Quantum Fund, had studied the situation. He saw what the Bank of England refused to admit. The pound was doomed inside the ERM. His strategy? Simple, yet bold. Short the pound, borrow billions in pounds, sell them for Deutsche Marks, and wait. Once the pound collapsed, he would buy them back for a fraction of the price. On the morning of September 16, 1992, history began. Soros placed a massive short position against the pound. His bet was worth $10 billion. Other hedge funds saw what Soros was doing and joined the attack. The Bank of England fought back. They raised interest rates from 10% to 12%, then again, up to 15%. They spent billions buying pounds, but the market smelled blood. Traders around the world dumped the pound. By evening, the inevitable happened. The UK government admitted defeat. Britain officially withdrew from the ERM. The pound collapsed by 15% in just days. For Soros and the Quantum Fund, the trade of a lifetime. In less than 24 hours, they made a staggering $1 billion profit. For the Bank of England, losses of $3.3 billion, a humiliating defeat on the world stage. From that day forward, George Soros would be known as the man who broke the Bank of England. So what's the lesson? Soros proved one thing: markets are stronger than governments. When a currency is fundamentally weak, no amount of political defense or central bank intervention can hold it up forever. For traders like you and me, the takeaway is clear. Study the fundamentals, not just the charts. Never ignore economic reality. And when you see a mispriced market, timing and conviction are everything. Soros didn't gamble. He prepared, he waited, and he struck at the perfect moment. George Soros' billion-dollar trade wasn't luck. It was the perfect storm of knowledge, courage, and timing. The Bank of England tried to fight the market and lost. The lesson? Never fight fundamentals. The market always wins in the end. If you enjoyed this story, subscribe to Trade Tales for more dramatic stories and real Forex lessons. And don't miss our next episode,